London Property, home of super prime, where you can find informative, educational and entertaining content covering all aspects of property.
Hello and welcome to London Property, home of super prime. I'm your host Farnaz Fazaipour, and today we're in conversation with Yael Tamar, who's the CEO and co-founder of Solid Block, based out of Tel Aviv, joining us to tell us all about blockchain. Welcome to the show.
Hi, Farnaz. Thank you. Thanks for having me. How are you?
All good, thank you. So, Yael, we're going to try and go into this with baby steps because a lot of us have a lot to learn from you. So, I suppose the first thing we should maybe discuss is blockchain and its relationship to crypto, because I'm sure a lot of people bundle these things together when they don't really know. So let's start from giving us really the idiot's guide to blockchain.
Okay, fantastic. So first of all, blockchain came into the realm in about 2010 or 2011, when this word blockchain hasn't even been used. And what people heard about was Bitcoin. Essentially, Bitcoin was the first application of the blockchain technology. So let's start with what Bitcoin is, and then basically in general what crypto is. So let's say that I want to send you, Farnaz, $100 in fees for your services. And I'm here in Tel Aviv and you're there in London. So I have several options. I can send you a bank transfer, a wire. I can send you money using PayPal or one of the apps, right? Venmo or stuff like that. So when I send you a wire, my bank is governing, my assets, is managing my assets for me. It will look at my balance. Sometimes the bank will say, you have no balance, you can't send $100. And if I do have a balance, then they will reduce my balance by $100. And they will actually send a wire to your bank, and possibly they don't have a direct connection to your bank. So there might be a few banks in between. So each of these banks is going to push the transaction forward, and your bank will add a balance of 100, mine will subtract, and there will be a transaction fee in between for all of this service. And a lot of times what I heard is that correspondent banks actually use individuals that push this transaction forward, right? Some of these transactions are not even automated, and that's why it takes a week sometimes for money to reach there. So that's basically how transactions work in the real world with this so-called SWIFT method. With PayPal, it's easier because PayPal, everybody has an account with, and there's just one party. It will reduce my balance. It will up your balance. Now, again, we're dealing with central parties that manage all of this process. Now, Bitcoin was so revolutionary the first time it came into the market because it was the first ever currency that was fully digital and did not have this central authority to check your balance and to make the transaction from one place to the other, from one account to the other. And because it's actually fairly complicated. If you don't have a central authority, how do you know that the same digital currency can't be used twice or three times or four times, right? In transfers between individuals. So the way that Bitcoin worked, and it was described in the white paper written by a pseudonym Satoshi Nakamoto, they described this process of the transactions, which also came with a network, the network of computers that collectively had a power through a fully automated mechanism to check the balance, making sure that one wallet, so the accounts, they call them wallets, the one wallet that wants to send money has the balance, that the other wallet in fact exists, that it's not, the money is just not going to disappear, right? Both wallets exist. One has the balance, they transfer, they take out the balance from one, add the balance to the other. That was the job of a network as a whole, through a mechanism that gives power to at least 50% of the system to decide to make decisions on these matters, as opposed to one bank or PayPal and so on. So that was a revolutionary concept. In fact, the system that allows Bitcoin to exist, because Bitcoin is the actual asset and the currency that was transferred in between the wallets with according to this white paper, to this system, is actually called the blockchain. So the blockchain is basically a network of processors that has an algorithm to approve various transactions, right? And then, so in 2010, the world changed effectively because now we had a tool that enables decentralized transactions. And that's very, very, very important. In some ways, it was very worrying to the banks, and that's why the banks were against cryptocurrencies initially. And so what did we find in the later years? That this blockchain mechanism can actually be helpful to store and transfer all kinds of assets, not only cryptocurrencies. You can transfer real estate, you can transfer rights to a song, you can transfer a picture of a chimpanzee. You can do a lot of things on the blockchain because it's a much better way to store and transfer assets, information, and money.
So you touched on the transferring chimpanzees, and we won't go into deep detail about this, but again, as a novice, is that what NFTs are?
Yes. So NFTs were in the beginning very popular tool for transferring ownership of digital art. That was kind of the first use case that everybody could understand, right? Art and collectibles. But with time, as any industry that evolves, it has actually evolved in more transfer of utility and rights of actual real world assets. So Solid Block has recently come out with a platform called NFT Stays, and we worked with a New York hotel to issue NFTs for stays in the hotel, for example. And we have several projects that issue NFTs for membership clubs, right? And I have read an article today that basically says that almost every entrance and access in the future is going to be done with NFTs. It's just much better way to grant people access to anything, information. Say you have a subscription for the New York Times, or whatever you can think of will be done with NFTs.
Wow! So the blockchain is the sort of hardware, and then the crypto is the software that you use to shift through on this hardware. Would that be an easy analysis, or am I simplifying it?
Yes. So the blockchain is both hardware and software. In fact, you can contribute to the hardware. Anybody can, let's say, mine Bitcoin in their home. They can place a computer to become a part of the system and earn money this way, Bitcoin or other currencies. The cryptocurrencies themselves, in fact, you're right, they are software, but I wouldn't simplify it in a way where hardware and software, mean different things. But cryptocurrency is a smart contract, essentially. And you know what? Money is also a smart contract. Well, money is a contract, but not necessarily smart. Money in general is an IOU. If you have a pound, you're supposed, and in a tour, you're supposed to be able to take this pound to the bank, right, and get a new one, right? So that's an IOU of the government that they're giving you a value of 1 pound, right? And cryptocurrency is the same. It's a smart contract, and a smart contract basically states that anybody who accepts Bitcoin. By the way, in El Salvador, for example, it's an official tender. So if you have 1 Bitcoin and you show up, or if you have whatever amount of Bitcoin, you show up at a shop, they are supposed to sell you a product and accept Bitcoin, right? So it's exactly the same concept, except there's no sovereign entity issuing this currency.
So it's going to be the global currency is what the future would look like.
Yes and no, right? So yes, because in general, there are several currencies that are very powerful, like Bitcoin and Ethereum also. But there are also government currencies coming out. They're called CBDCs, central bank digital currency, and where the government will be issuing a digital dollar, a digital shekel, or a digital pound to kind of streamline the operation, that you don't have to print money anymore. You don't have to touch money anymore. It's a double-edged sword, because it could also, some people argue that it could be used by the governments to control people's spending. Let's say if you want to buy something they don't approve of, they could switch off the access. So, but yeah, they're actually, governments are using blockchain even now for many things. Even, let's say, title transfers for real estate. Some governments are using blockchain. Many governments are using blockchain for financial reasons. and records, keeping records, and banks are using blockchain as an alternative to SWIFT for interbank transactions. So it's actually it's very widely used, almost as wide as the internet now for the B2B, kind of for the business world.
Wow. Okay. So can you give us some scenarios of how blockchain is being used in real estate?
So there are many applications actually of blockchain in real estate that have been explored. The easiest one, as I mentioned, is a title registry, and that you don't have, anywhere where you keep a lot of information and a lot of data and transactions are happening and you want to streamline the transactions, blockchain could be extremely helpful. So in countries like Georgia, they're using blockchain registry, title registry, to facilitate very fast and quick transactions, basically of the title wallet to wallet. It's actually reminiscent of NFTs, right? Early NFT, pretty much the same. You get a token that represents your asset and it goes in between, individuals' wallets. Pretty much the same, but on a government level. And for this transaction to happen, there of course needs to be many rules, right? You need to verify identity, you need to verify ownership. So they pre-verified ownership for every single asset. It took them several years. And now, because they pre-verified, they can do these transactions so quickly, right? So that's one application. Another application is placing real estate cap table or ownership table on the blockchain. So there could be one owner per asset. There could be many, right? Sometimes you have syndications and where you have many investors coming in and holding a piece of the asset. This happens in commercial assets mainly, right? So why should we put either all of the cap table or some of the cap table on the blockchain? Well, very simple. As I mentioned, in 2010, when Bitcoin came about, the world changed. And the world of blockchain technology is evolving much, much faster than almost any other fintech. Fintech is a financial technology, and almost any other tech, right? So it's evolving much faster than almost any technology. So now in the world of finance, there is basically such evolving field as Web3 or blockchain finance, sometimes called also decentralized finance, where you can borrow and lend against crypto assets, against digital assets, where you can combine these digital assets in indices and structured products, and also gain a lot of liquidity that way. So there are all of these economic and financial operations available, and that's what Solid Block specializes in. We specialize in moving cap tables of assets into the blockchain and almost building identity of an asset on the blockchain, so that the owners of fractions of those properties can have access to loans, have access to different products associated, different financial products, investment opportunities, swaps, trading, all kinds of things, just for the regular assets that they have, brick and mortar. So that's another application. When we talk about assets, there's also other aspects like asset management, for example. There is a company called RealBlock that's using blockchain very successfully for asset management, and they claim that there are huge savings on costs associated with asset management. I think they mainly talk about commercial real estate. Somewhere 30 to 70% of the costs. And so they recently partnered with a huge real estate asset management company called LaSalle. Right, so they're putting 70 billion worth of real estate on these blockchain rails, right? So that's already something really, really interesting, right? And then the final use case that I want to mention is marketing or online presence of an asset, right? So, and that's where we can touch upon the evolution of the internet. So from Web 0 to where we are right now, which is Web 3, the new generation of the web. So the initial Web 1 was in early 2000s or late 90s, where websites were kind of all the rage and everybody wanted to have a website, so every company. And then in that Web 1 period, you had Craigslist in America. I'm not sure what you guys had in the UK, where you could list your property and then list your phone number and people would call you. It already increased exposure, right? Because as opposed to newspapers and radio, right? So you could actually list your individual property. And then with Web 2, you had ads, you had basically apps. right? In 2010, you had apps and you had Facebook and you had Twitter, and you could actually have a Facebook account for your, real estate agency and so on, right? A Facebook page. So that was the evolution into the apps. Now in the Web3 world, we're moving into a more 3D and experiential environment. A lot of it is on the metaverse. So you can actually place your asset like a digital twin in the 3D environment or a metaverse environment, which is like this interactive environment where, by the way, most of the social media is going, right? Facebook was renamed Meta for that reason, because we're now going to be consuming web experiences in a totally different way, right? More lifelike, more interactive, also more ownership driven, right? You can actually buy like even a piece of Facebook with permanent display, for example. So I think those are kind of 4 use cases that I would outline.
So really, the blockchain of the future, we will all be digitally twinned, and so will all our assets, and then we can just trade in that other world together and quickly without all the overheads and without all the delays.
That's exactly the idea. Now, I know that there's some concerns that frictionless real estate could lose some of the real estate power, which is in the pricing and the stability and so on. And I generally personally did some research and kind of modeling into where the stability of real estate is coming from. And in general, the stability, in my opinion, of real estate is coming from population growth and the utility of real estate, because no matter what kind of digital world we're going to live in and trade in, at the end of the day, all of us have to sleep somewhere and work somewhere and exist somewhere, right? The offices is where companies live at the end of the day, at least part of the time, shopping malls and places where people interact, at least today, right? That could change in the future. But as you saw with COVID, where we all got Zoom and Amazon fatigue, and people actually started, coming in droves to shopping malls. So it's not only a place, the interactivity in the real world was still driving the real estate. So I think that's always going to be here to stay.
Yeah, I mean, I think it's just going to bring efficiency, isn't it? And it's going to cost a lot less and bring a lot more certainty. I mean, we just recently did research into how many transactions actually fall through from when the offer is accepted to when the contracts actually exchange. Wow. And it's something like, in excess of 35% actually fall through. And usually, that delay is caused by the paperwork and by things that if they had happened faster, then people's sentiments and people's, kind of momentum wouldn't get lost and deals wouldn't pull through. So that I can really see, where that's going. But you're obviously very ahead of your game. And
so this use case that you mentioned is also an important use case. In fact, one of my friends, Natalia, is CEO of Propi, they're a Miami-based company. So they actually do all of the transactions in the absence of title registry on the blockchain. They do actually these individual home purchase transactions via NFTs that go, through in seconds. And there are no delays. There are no 2 steps. Everything is done on the blockchain. So that's definitely the future of, single-family home transactions.
And can you tell us a little bit about the NFTs for Airbnb model that you were touching on? Yeah.
So in general, when you order, any sort of stay online on a hotel or in a hotel or in an apartment, in a home, and so on and so forth, I think that the NFTs are definitely will streamline the whole process of you kind of searching for assets and finding something that's suitable to you and so on, right? So I personally spend so much time in searching through different Airbnb listings and so on, and I would also prefer to be a part of some sort of a membership club in a specific asset, right? So I'm able to go and come and please as I go. So that's what NFTs provide. NFTs basically provide brands or hospitality owners with a way to accommodate their user base, right? So they can sell NFTs to the users to be able to book, with a certain discount or just all-inclusive packages, and differentiate themselves from any other hospitality user, and also enable very easy redemption of different perks. So you can add hospitality, but you can also add the spa, and you can add restaurants, and you can do whatever you want very easily with NFTs. And also you can verify on the blockchain, verify whether these benefits have been used or not, right? So the individual can actually resell. They can buy an NFT to stay, let's say, in a London property if they think they might go to London this year, but maybe they won't go to London at the end of the day. So they'll just resell the right to stay on the property to someone else.
So then that way the actual property will, again, from identity purposes, will be verified that when they passed on from one person to the other, they'll know exactly who's coming in.
Yes, exactly. So I don't know if they will exactly know who's coming in until the person actually registers. So they might own the NFT, but they haven't, when they redeem the NFT to a stay, they would go through the usual websites, either Airbnb or Guesty or whatever they're using, and they'll get 100% coupon. So they'll know who this person is when they actually register for a specific date. But the NFT is more of a general kind of ticket to use, right, for ordering. So they will know, but they won't know necessarily who bought the NFT and who holds the NFTs. So
right.
Until they're redeemed, yeah.
Until they're redeemed, and the benefit of this to the consumer is basically the ease of use and the efficiency. Is there any cost savings?
So there could be cost savings, and in general, I think it will encourage people to buy in advance, especially now. I would totally do this with airlines if they offered me this right now, just to pre-buy, pre-buy a ticket and then use it later on, because as you know, airline tickets go up faster, and this can help companies and businesses to also kind of gauge the demand. I think in general, to tell you the truth, like a lot of times with these technologies, you don't know where it's going to go until the industry pushes it in a certain direction. So we decided to release the NFT stays here and then let the users decide what are the main benefits. And the hotels themselves and their marketing experts can design a product that we can facilitate from the technical point of view. But they should know what is the best product for them.
Yeah, and for businesses, I guess it brings some form of security, because if you're forward selling things, then you know what's coming in the future.
Exactly. And they can reward their most active users, right? And their most loyal customers.
Yeah. Well, I'm very fascinated to see how all of this will develop, but I can certainly see that, as I say, you are ahead of your game, but as more and more people take on, and I guess it's going to have to come from the suppliers taking this on and then educating the consumers, then, it becomes more of a commonplace. So you don't think that there's going to be a fragmentation? So the same way that you've got the different Bitcoin brands, do they all in the end become one platform, one unit?
Yeah. So in terms of Bitcoin and other currencies, so there's some very strong currencies, and then there are alternative currencies as well that fuel all kinds of ecosystems. Usually behind a currency, either it's just very, very much cryptocurrency for the purpose of exchange. Bitcoin is one of the examples. A lot of the other currencies power some sort of an ecosystem. But in terms of NFTs, every hotel, every property, everything will be a separate NFT. You could have a package of NFTs selling, just kind of, you have sometimes a package of, gifts coming to your house every month. So I could send you a package of NFTs, like I can send you access to a spa, I can send you, $100 in a shop, I can send you to a manicure appointment and so on, right? And then if you don't like something, you can just sell it, right, to someone else. So it gives you more control over the services that you order.
Okay. So really, from a real estate perspective, it has to, it's the titles that should be digitalized for it to really get going and get people on board. So one to watch is Georgia, basically.
Yeah, so the title registry would definitely help everybody, but blockchain entrepreneurs are so savvy that they figure ways around the government kind of restrictions and, not in terms of breaking the law, God forbid, but also in terms of kind of, they can't wait for governments to implement things. So you can still benefit from home sales through NFTs, right? So there are companies I mentioned as Propi that enable person-to-person transfers. But and in terms of individual home buyers and home owners today that, let's say, offer their home for short-term rentals, they can use NFTs to sell to sell the space. They can also use NFTs to sell the home, right? So this would probably be the best model for let's say a developer that has either a multifamily or that has a bunch of single family homes to sell. And they can basically even sell them or do a long-term lease via an NFT, right? They can still keep managing the asset, especially for somebody who comes into town just a few weeks out of the year. And so they can even rent out the property for them the rest of the year. And the NFT holder can get the majority of the rent, right, minus the management fees. So this is much, much better done with NFTs than traditional contracts, right? So because the person who's coming doesn't know the local laws, doesn't know how to buy, doesn't know how to register, it's complicated. They can just buy this NFT from a company that's managing the property for them, will let them know when they're coming to stay, and the rest of the time collect the rental income.
That's another really good point. So you're actually standardizing all the different jurisdictions and all the different regulations, because all you need to learn is how to deal with it via blockchain and NFT. Well, that's really, really interesting stuff. I have got actually two people in mind who are involved with our platform and our experts directory who are at the cutting edge. One is selling a little bit at a time into investments. So it's kind of group investments that it might be very interesting for them. And the other one is a residence a residence club, which is launching imminently. And I'm actually meeting the founder later on this afternoon. So it's all very exciting stuff. And thank you so much for giving us an insight into what you're doing. And we will certainly be keeping an eye on your developments and look forward to talking to you again on our show.
All right, fantastic. Thank you, Farnaz. Have a great day.
Thank you. Thank you very much. Thank you for listening. That was definitely a very educational chat with Yael in Tel Aviv. To listen to other experts that we've interviewed on our show, you can follow us on all the normal platforms to listen to our masterclasses that come out every Friday. Alternatively, head over to londonproperty.co.uk, look at our experts directory, and find the professionals that you need for your transactions.
Thanks for listening to the London Property Podcast. Head over to londonproperty.co.uk and subscribe to our newsletter to receive latest updates.